What up, everybody? My name is Chris. This is Wheelhouse Trading, and welcome to the Wheelhouse. Okay, if it's your first time on the channel, do me a favor, hit that subscribe button, hit the like, and select all if you want. Make me a comment, and let's get into it. So, we are dealing with a bipolar market. The market had a condition, it would be schizophrenic at this point. We are at extreme fear. There's a lot of reasons for that, and a lot of them are valid. However, when you have the institutions going on TV over the last couple of weeks on Bloomberg saying, we're waiting on a capitulation, but yet retail is only 14% of the market at this point. So 86% of the market is institutions, so there's nobody left to really capitulate but them. Well, guess what? They started doing it. They stopped buying investment grade bonds. They're pausing on buying equities. And, they're capitulating. There's not a lot of retail left, and inflation is a huge part of the story. And, there's issues with this nuclear narrative with Russia and the U.S. saying, it'll be Armageddon and we'll step in with Ukraine. And I'm not saying that that's going to happen, but that's certainly something, you don't want to be in the market when something like that goes on. So, yeah, it's going to be scary. So if the Fed would have just, done quarter point hikes and started several months before they didn't start till March of 22? And they were talking about it, I think in June, July, August of 21. If they would have just started doing quarter points in August, September, even October, whatever, it would have been more of a soft landing, and it wouldn't be a knee-jerk situation where the housing market has to crash and they're, focused on unemployment going up and labor market coming down. And, I don't know why people are like, we might have a recession in 2023. We're already in a recession. I mean, we had 2 quarters of slowing growth, right? I mean, historically and typically, it is true that the labor market will not be as hot, and there will be more unemployment for a recession. But guys, it's slowing growth is the technical indicator on that, and we're already there. And so I just already know that the market's not going to like decelerating earnings. Okay, if you go back and you think of, I think it was like 2000, might have been 14, 15, and 16 that we had flat non-growth earnings. Yes, we still were in a bull market because we hit the bottom in 09. And we went up from 09, 10, 11, 12, 13, got back to where we fell off. So we went down from, I just call it October 2008, boom, hit the bottom in 09, and we creeped all the way back up to like 12 or 13, and then we got to even. And then 14, 15, 16 was like the start of a bull run. It went on for 11 years, from 2009 to 2021 is when it started to fall. So 11, 12 years. That's a good run, and we still went up with decelerating earnings, but in those years, even though we went up, there was crazy, it took a while for it to become like a smoother bull run. A lot of stuff looks like it's bottoming. It really does. But what doesn't look like it's bottoming, and I've said in the last few videos, is this does not look like a bottoming process. You're looking for a June double bottom low here, but we cut right through it, which was scary. We rallied up through a double reverse breakout on the Dow and then dropped right away. It's almost uninvestable. And you go to these books, these great world famous investors that pretty much all, and I'm talking investors, not traders, pretty much all say, identify the zone, buy when there's blood in the streets. If you were to invest, in these bear market lows or recessions and just hold, and you bought quality companies. You can't buy momentum, meme, speculative, high growth, super crazy picks. You have to think about quality companies that are beaten down, that are going to survive the earnings. It's going to come down to earnings. I said it for a year, not in every video, but I've said it many times. We're going to come back to a fundamental type of market eventually. Fundamentals will always roll. Right now, we're in a technical market. We've been in a technical market since basically started September of 2021 and really became just a straight technical market after November. And, that's when you got to make a decision. Are you going to stay in the market, or are you going to get out of the market and just take your gains? The second decision is, are you going to trade it? Well, trading a bear market is really difficult. And even though there's a lot of optimism out there on Facebook and Reddit and YouTube and whatnot, psychologically, it wears you down. It wears me down. Even doing YouTube wears me down. I mean, keeping up with the current news and explaining it and getting faked out and all these bull traps left and right. It wears me out. I'm assuming it wears out all these other YouTubers too. I have to assume that it does. And because it takes a toll. And it takes a toll on people that are new to the market. If you're new to the market, you're probably not even watching this. If you're new to the market, this is hell. Because this is already pretty scary, even for a guy like me that's been in the markets and has seen volatility and turbulence and thrives on momentum and volatility. I do. I thrive on it. When it's like this, I go short and I make money. And when it's like this, I go long and make money. Let me show you something. I'm going to show you. So today I traded all day. Okay, and it's from the left all the way to the right. I think I got as high as 78.17% win rate today, ended at 76%, and it looks good. Okay, let's take a look. Okay, pretty good. Trading. It's a trader's market. I'm a trader. I can make money trading volatility and momentum up or down. My HODL portfolio looks like the opposite, okay? It's basically here, and then it's going down to the right. So, but here's the thing about the HODL portfolio, and this is kind of what I was getting back to with all these world-famous investors, and I have to sometimes take a step back and realize when Chamath or Paul Tudor Jones or Warren Buffett or a lot of these, Joel Greenblatt, a lot of these, big investors be greedy when people are fearful and identify this zone. Now, what's scary about this zone is that when you break these indexes, you can come down like 15, 20 more percent. From the top where we started to fall, okay, that's 20%. If we can go another 15 or 20%, we're basically looking at all this pain again. Now, it's really hard to say that is going to happen. But I've read a lot of books, and I know how a lot of bear markets started, and I know how they ended, and I know that what the Fed did to induce, crashes and also to bring us out of recessions. I know what they did, and I have videos called the Fed Playbook. In my channel, you can go find it. Which is why I told people to get out here that we were going to come down. And I made the decision to trade and did and made money. And then I decided in September, which was the worst month ever in like 100 years, to start my HODL portfolio. And I knew it probably could come down more. I didn't do the HODL all the way down. I just started it like right here. You know what I mean? I just literally started it right here. Like right kind of a little bit above where it's at. And it's still down. It's not down like I'm sure some people's are, but it's it's down and I don't like it. But the thought that it could go down another 15, 20% is scary. And it's the whole reason why I sold my estate. It's also the reason why I bought my estate. We had the pandemic, and we had stimulus, and we had stay-at-home orders, and people got in the market. The Fed was pushing the money printer button, and the market propped up, and so did the M2 money supply, and therefore it went to the stock market. It propped up the indexes, and the indexes are umbrellas, and the stocks that are in it, as well as the crypto space, all went up. And, then the Fed was like, hey, we need to pull liquidity out of the market. We got to crash the stock market. Well, I know from history that, the next thing coming is real estate. But I timed that correctly. So during the pandemic, I closed my business and I put my money into a luxury estate home on the water. I did that because, number one, I knew that real estate and stocks go up with inflation. Number two, I knew that the supply and demand, that a luxury waterfront estate is unique. It's not a run-of-the-mill home, and it'll sell as long as you get it listed, quickly instead of wait too long, which I did. So I sold the boat, got cash heavy. Now I wanted to buy the bottom of the crypto, bottom of the real estate, bottom of the stock market. And I started doing that in September. I've been nibbling. I'm in about 30%. I'm mostly cash. I've started to nibble right here on this blue line, essentially. Maybe it's a little higher, but it's September is where I started it. And I bought a whole bunch of stuff, and I entered correctly, and I caught momentum, and I made money. And then I had made alerts in the group. Hey, we got to put stops on these things because even though it looks good, like we could be going up, we got to put stops and we don't want to lose our gains. So, Friday, and I didn't make a video since last Tuesday, Wednesday or something. And Friday, a whole bunch of stuff got stopped from my HODL portfolio in the profit that I didn't want to lose. DocuSign was one. I'm going to rebuy it. Palantir was one. I'll rebuy it. PayPal was one. These are all profitable ones. Okay, I had tight stops on it because I didn't want to lose the profit, and I had entered correctly. And when you enter correctly, 80% of your future problems go away. The thing is it's really hard to get stats like that to work for you when you have a schizophrenic market and you have so much fear and you can't, get past one follow through day. Guys, this was 4 days on a pivot. This was 2 or 3. I think it was 2 or 3. So it shows 1, 2, 3. So there's 3. Okay, and here we go. I mean, this is erratic behavior. If all the institutions are, waiting for a retail capitulation but haven't quite realized that retail is only 14% and now they're capitulating themselves, yeah, that's not good because we're just retail, guys. So we have to follow the money. We can't move a market. Okay, we can't move an economy. Okay, we can't do that ourselves. All that we can do is, get in, establish the floors, technically find momentum, establish a pivot, and ride it up, and then protect our gains with a trailing stop or a stop loss on the way up. And hopefully it's a hot sector, and hopefully it has institutional support, and hopefully there's good earnings, and hopefully it's a sector that institutions want to buy because, momentum breeds momentum, but it breeds it with them and the big buyers, and all we can really do is follow the money. Well, if there's no money to follow and everybody's selling and everybody's fearful, it's like, where does this thing end? I am glad that I started buying in September, but if this is only a halfway point, I'm not going to be happy. And I wasn't happy that I got stopped on Palantir and DocuSign and PayPal, and there was like 3 other ones that were all in the profit that I liked the companies, and now I have the cash and not the companies. But I started thinking about it. I was like, well, man, if this thing, comes down, like, Jamie Dimon is thinking, and, some people, chief economists at Goldman Sachs and some other people, if it comes down, this amount again, I'd be happier to retry lower, and it's good to have that cash so that I can apply it when there is momentum into stuff that's barely down and get that out and springboard out. It's a tricky market. Psychologically, it's hard on us. We're getting faked out left and right. We can't catch any good news, and when we do, it feels like the long con. And who's doing the long con on us? It feels like our own government is doing the long con on us. Why didn't they raise the rates sooner? Why didn't they print less money? Now they're, coming for the real estate market. I mean, I'm not going to say I didn't see it coming. I mean, obviously, you saw my whole journey on YouTube, that I said it was coming, and then I sold the home, which I was in love with. I didn't want to sell the home. I did. And, and I knew they would come after the layoffs. But, what they don't say on TV is why they want to come after the layoffs. And everybody will say consumer demand, and everybody is correct. But there's another caveat to that piece of information. One of the reasons the government wants the unemployment rate high is not only consumer demand and spending, which is a huge part of it, okay? But it's also because they can control the spending and the amount of money that you get from unemployment. So it's more of a structured, controlled consumer demand when you're on unemployment. It's sad. It sucks. Sad, like food stamps and unemployment and stuff like that. That's and they only give you so much where you can barely get by. So you're not going out spending extra money on things. That's certainly going to hurt earnings, and you're going to have decelerating earnings. And so if you're going to buy, you want to, buy in this lower zone, obviously, because you can't obviously figure out a bottom because nothing is making sense. Technically, fundamentally, globally, economically, nothing is like, everything is a little quirky. It's a little off. And, so this is what, I kind of wanted to just talk about. I wanted to talk about simply some tips for investing and, some tips for trading. You saw my trading is doing really well. So we'll talk about while I have my longs and I'm trying to not worry about it and I'll add to it, we get to new support and there's momentum. But also, I can stay active and I can trade and I can make money every day doing that. And then, if I want to pull funds, I can put that into the HODL, because at some point this market will go up, guys. It will go up. Now, if there's some crazy nuclear war, a black swan event that's super insane, I don't know. I mean, I can only go off of what has happened in the past, and but for the most part, I feel pretty confident telling you the market's going to go up. I mean, it always has, and I think it always will. But what we don't know is when. Now, my technicals say that really it's not going to start to go up until August 28th, 2023 to September 2nd, 2023, somewhere in that little week. And that's just simply based off of a very simple chart pattern. It's not rocket science, and it could certainly be wrong. You just have this descending, and it comes way out here to August 28th, 2023. But here's the deal. The lower this goes, the lower that this price action goes, the further out that the descending goes. Okay, you notice that? So if it didn't go any lower and this was a floor, well, now the end date would be December 5th, 2023. So as you could see, this is, data in progress. Data in progress. We can't really say, but it looks like it's going to be a long road. And this does not look like a bottoming process with these huge knee-jerk jolting moves. That doesn't. What looked like a bottoming process, just to kind of show you, what one of those might look like, is something more like this. Okay, so we are on the daily. That's fine. Okay. Now, this thing was, and it went into way deep thousands. I mean, deep thousands. I think almost 30,000 a share at one point. Okay, but just right here alone was $678 a share. And this is around $27. The other day when I made a video, it was $25. We bought it, I think it was $20 or lower. Okay, this is a bottoming process. Okay, see how it just goes sideways forever? It looks real boring. Okay, and then it starts to pick up steam. Okay, that's a bottoming process. Another example of a bottoming process would be something like this. And I'll have to put this on the weekly because the chart is so big. And this is a 3-year cup and handle, okay, from 2018 to 2022, where it broke out, which was right over here, okay, and it started over here. But see how it came down, and then this went green, and these went, and everything synced up. See how it kind of leveled out and then smoothed out and went up? That's a bottoming process. Now let's go back to the Dow. I'm just messing with you, huh? When I show you this Dow, look at this. Okay. That doesn't look like a bottoming process to me. That thing it's more than shaky. That's violent and schizophrenic and loaded with fear and uncertainty. It's crazy. So, yeah, I mean, all the indexes are looking shifty. My HODL's my HODL. I didn't get involved till September, and I chose quality companies. Some went up, and I sold and took a profit. Some went up and got stopped in the profit, and some are down. Most are down at this point. Most of the ones that are up at this point are my leverage bears, DRV, FAS, JNUG, and I have some cryptos that are up. Like Link and Matic and Sushi and stuff like that. But I have a lot of reds. Now, I don't have crazy reds. Let's see. I have, this one's down 1.7%. It was green, though. That one was green. But I didn't have, I have a stop on it, just not in the profit. It's still lower. I got one that's down 12%. I got one that's down 16%, and I just started buying. And it's down 16%. That's insane to me. This one's down 7%. I have a 9%. Yeah, they're down, and I just started buying. I can't imagine if I just held all the way through it. That would be pretty gnarly, dude. So this is what I think. I think that if you're going to invest, and we don't really know exactly where a bottom, and this doesn't look like a bottoming process, and certainly the economic problems are not over. If anything, they're probably just beginning. Unfortunately, even after all this pain, they're probably just beginning, because the labor market hasn't folded, and unemployment is way up there. 7, 8, 9, 10%, and the real estate market hasn't crashed, which they say, big correction, but I mean that could be a 30% jolt, and if you're only 5% down or something right now, I mean, imagine how crazy that'll be. And a lot of people, they attribute the last part of their wealth to their real estate, because we know that savings are down. I mean, when they came out and said, oh, the savings is still high in America, and I was like, bullshit. People they don't have a lot right now. They have their home and they have good credit, and they don't have a lot of extra cash. If they did, they would be putting it in the market. Instead, they're pulling it out because they need the money. And that's what the Fed wanted to do. They wanted to take the liquidity that they had put in for the stimulus and the PPI programs and stimulating the economy. They wanted to pull that out, bring down the market for two reasons. One, if you're a long-term investor and you rode this whole thing down, you're not going to sell at a loss, especially way down here. And if you don't have that money in your hands, you can't spend it. So they're controlling consumer demand. The second thing that they're doing is, if you did panic sell, well, now you have less money and you probably feel that you can't spend. So therefore, they're controlling consumer demand. So either way you slice it, the Fed won. Okay, but when they say that you have a lot of money in your savings, when you really don't, and that's BS. And when they come out with a jobs report and say, hey, we got 372,000 new jobs, but you start reading through it and you realize that only 315,000 of the 372,000 were second jobs, that means there's only like 60, 65,000 real new jobs. And why were there so many second jobs, Chris? Well, there was because inflation and living costs are so expensive. Rental costs are expensive. Gasoline is expensive. Food's expensive. Diapers expensive, milk's expensive. Everything is expensive, right? It's inflation. And, people are getting second jobs, and they're doing it to survive. Not because they have all this money in their savings. If they were, they wouldn't be swiping the credit cards, and the credit market is about to get defaults, and it's already starting. There's already cracks there. I told you guys the Fed playbook, and it's all happening in the right order. It's a shame. And so, yeah, they don't have the savings. They have, people using their credit. And the last thing they have is the real estate, really. And, I'm not saying sell your real estate, because if it was a smaller home and, you got it for $500,000-600,000 and you thought it would go to 800, but maybe it went up, and maybe it comes back down a little bit to kind of where you started, it will go back up. Real estate will go back up. Okay, it will. I sold mine because it was a luxury waterfront estate, and there's only so many buyers. And I also bought mine so that it would appreciate, because I was used to having a business. It would appreciate in equity, which it did with inflation. And I knew that at some point I'd probably have to sell it. And I wanted to sell it before I lost the equity and some of the principal, which I did. And that's why I'm renting right now in Middle Earth. And I have full-blown allergies because I live in a dust bowl. It's all a brand new home, never been lived in. The whole community is new. There's not a lot of grass, a lot of trees, a lot of vegetation. Like me and my daughter, we're like sneezing and our eyes are watery, and it's like, you get allergies out here, but that's besides the point. Anyways, I took the sacrifice, and, because I saw it coming, but a lot of people out there that decided to keep their home and don't have a lot of savings and now have a second job are at the place where they can't invest. Their 401ks are down, and there might be hearing rumors at their employment place that there's, possible cuts and layoffs. And that's a scary thing right before Christmas, going into an economic recession in the United States, or better yet, a global recession, which is really what's in front of us. So if you're an investor, you want to be near the bottom. We can't find the bottom, obviously. I can find the bottom almost every day in the stock market on intraday, but this macro environment is so hard to pin down. It's so hard to pin down. Now, I was a little sad when we came down here and we jumped right back up, and I'm a little sad and we could jump back up. And let me tell you something. Later this week, CPI data comes out. What if CPI ticks down? Institutions are capitulating. Retail's out of the market. Everybody's freaked out. The FUD is everywhere. And then all of a sudden, it ticks down and it's a huge green day and it comes back up 5-6% up to here. That could happen because this type of market is extreme and overreacts to the upside and downside. If there's one thing you can count on volatility in this market. That you can count on. But you got to stay true to your plan. So if you're an investor, I mean, look, I was telling guys in the group, I'm like, God, Disney at like 94. If it goes down to 90, I'm going to buy like a couple hundred more shares at a minimum. I had to buy AMD this low. I had to buy NVIDIA. I had to buy a lot of this stuff because these are quality companies. Like, yeah, they're going to have problems. They're going to have decelerating earnings, but you know what? They're not going to go bankrupt. Microsoft's not going bankrupt. Apple's not going bankrupt. Disney's not going bankrupt. If they do, I guess I'll look like a total idiot and be wrong, but I don't think that those companies or a lot of companies in the Dow are going to go bankrupt. I do think that there's going to be pain in their price, but to me as an investor, not a trader, an investor, you know, and if you've been in the market for a long time and you were buying Square above $200 and now you can get it at $56 or $60 or wherever it is, I mean, you remember. You know what I'm talking about, you know? So, you know, PayPal at 300 and you're getting it at like, you know, $80. I mean, if you don't need the money and your bills are cool and everything is stable, that's a cool investment, right? Unfortunately, I got stopped on my PayPal in the profit, but I wasn't up a lot and I will rebuy it. I'm actually glad I got stopped in the profit and I have cash and then I can just apply into other ones or the same ones, whatever. I could, you know, I have the option, right? So as an investor, you kind of have to look at it like the wisest investors, you know, say that they made, you know, fortunes buying in the bear market lows, in the recession lows, and just holding, not trading or anything, just holding. And if you do that, and you have the time horizon, 3, 5, 10 years, whatever, 20 years, 30 years, whatever, you know, that could be a real big wealth transfer. That could be a huge multiplier for you, 3x, 10x. It just depends on your portfolio and, you know, growth and your picks and your weighting of them and whatnot. But you could do really well. And those guys, you know, they couldn't get the bottom perfect either, but they bought quality companies, ones that would probably have decent earnings in the future, and they would wait. And eventually it works itself out. We just don't know how long it's going to take. I just feel that the Fed is just being too aggressive. It's just my personal opinion. You know, I did go to school for business, finance, and economics. I have a head full of, you know, read a ton of books on this topic. And, you know, I feel like, you know, I'm kind of a student of history and also fractal patterns and pattern recognition and things like that. And it's just my personal opinion. I just think that they should have started a little earlier with smaller rate hikes and jacking it up like this. Something is going to definitely break. And you can see it's already starting. And it's creating more fear. And it's creating more technical downside. And there's a lot of emotion and uncertainty in the market. And you can see it in the charts. It's amazing if you're a trader. Come in my group. We could trade and we would kill it in this market. But investing is, I want to talk to you investors because this whole time I've been on YouTube, I've been a trader and I've been talking about how much money I was making. Well, everybody's in pain. Well, now I'm investing since this blue line and we're down a little bit and I can feel your pain, even though my pain is only a centimeter and yours is, you know, 18 inches. Hey, be nice. But it's still painful, right? So this is all that you can do if you're going to invest in this psychopathic, schizophrenic, bipolar style market loaded with uncertainty and fear and booby traps, bear traps, and ninja stars being thrown at you and dancing on razor blades, you know, cool. But do it with quality companies and nibble, okay? Buy on supports, which you're going to have to go back on these indexes or the stocks or the cryptos. And you're going to have to look for like pivot low areas like here. So if I were to come all the way across, it's something like this. So If it came all the way down to here, that's going to be some form of a support right there, right? So you're going to want to do it technically. And hey, if I can get AMD and it wants to come down to $30, or I can get Squared and it wants to come down to $25, I mean, I'll be here. I was 30% invested, and now I've got a little bit more cash, so I'm probably like 28% invested or something. So I do want to get my money in, but I'm not in a rush to do it either. You know, I'm very pleased that I sold the house and I sold the boat. I wasn't pleased that I had to rent and do those things, but I knew that it was a sacrifice and I would have a lot of cash and no debt coming into this environment. I also knew if I started the portfolio in the worst September in 100 years, that's a good place to start. I did not go all in. I started positions and I have a lot more ammo to go. So I feel pretty good about those decisions. But, you know, if let's say, you know, Jamie Dimon or Goldman or some of these other, you know, big institutions are correct and this thing comes down, you know, 15, 20 more percent, which is double this pain. Whew. Man, I am going to be so sad every day in front of you on YouTube. I'm going to be sad. I know how to do trade management and I know how to get myself out of trouble, which I've explained in videos, but yeah, it's going to be tough. And gosh, I hope that doesn't happen. But if it does, that's why I have cash on the side. That's why I started in September. That's why I'm only 30% invested. And, you know, yeah, those were smart moves, but I've been in the markets a long time. But for some of you guys, you're new to markets. This is the first time you owned a home. Me, I've owned a lot of homes. I've built homes, 50 of them actually, plus or minus a couple. You know, I've been in markets, not a ton of bear markets, but, you know, I've been through a couple. Been through recessions and whatnot. So I have some experience. I've been doing this a while. So that's how I kind of know to do things. But if you're new to the market, this is tough. But I just want to put you at ease and let you know that if you buy quality companies that, you know, have a good value on the price and they're going to make it through this bear market, not go bankrupt, and they're going to have earnings and they're going to have demand and they're going to have business. Well, and you can hold and you don't need the money for bills, you know, nibble down here. You know, it's not a bad thing to do that. You could also wait, but I've decided because I don't know exactly where it's going to land. It's okay for me to nibble, but I will make my nibbles into bites, into like, you know, chow down the lower it goes. I'm going to go heavier. But I'm going to do it technically into momentum. I'm not just going to, hey, once a week on Monday. You know, I'd rather say I want AMD, and it's in my head, and it's a high conviction, and instead of putting, you know, $1,000 in every Monday for, you know, 15 weeks, that's $15,000. I'll just hold the $15,000 on the side and wait for it to establish the floor, and then drop the whole thing in there, and then at once, you know, at the bottom instead of you know, on the way, you know. So yeah, it's tough out there. It feels like the long con by our own government, and you know, it's kind of sucks. But as far as trading, you know, volatility and momentum like this is sick. It's sick. And I showed you my equity curve for the day, 76% win rate, and that's what I'm doing at the Wheelhouse in the Discords. I'm teaching people a system based on 3, in my opinion, of the greatest you know, system, trader, and most profitable momentum trader. And then I've tuned up the technicals with specific coding to like get you early buy signals, early exit signals, and to hold on to gains and teach you everything in between. And that's what we do at the Wheelhouse in the Discord. And we, you know, I help people Wednesday night in the public group trainings, Wheelhouse Wednesday, it's called, for free. And you can come in and be part of that if you want. And for trading, you know, I got guys in there showing me 200%, you know, 180%. I mean, people are making gains trading. Everybody's having pain investing. It's not an investable market. It's a trader's market right now. It's not a fundamental market right now. It's a trader's market. But like I said earlier in the video, it will be a fundamental market in the future. And you need to start thinking about that now. What's going to decelerate the most? Who's going to have demand? Who's not going to go bankrupt? Is it a quality company? And do I want to nibble, or can I nibble now? and hold for a long time, because those will be good investments for you. You know, look at Disney. They got, you know, rights to Star Wars, Marvel. They got cruise lines, real estate, theme parks. It's Disney. I mean, Pixar. I mean, all the cartoons. I mean, they got Disney Plus. I mean, they have moats. They have revenue streams. I mean, I like Disney. You know, I mean, Amazon's a juggernaut. Google's a juggernaut. Apple's a juggernaut. Microsoft's a juggernaut. You know, Visa, McDonald's. I mean, they're not going out of business. They've been here for a long time. They're captains of industry. But they are going to have their own form of layoffs and decelerating earnings and some pain in their stock value. So if you decide as an investor that you want McDonald's, then, you know, you kind of let it come down. You let Walmart come down. You let McDonald's come down. You let MasterCard come down, whatever. And you have it in your mind. You identify the zone and you say, I'm going to start it, and then I'm going to wait for a technical level, and then I'll apply into it. Unfortunately, if it breaks, you wait for another technical level, you buy, you know, and that's all you can do until it finally sifts itself out, you know, and the market settles. So we're just going to have to see what happens. To me, trading it is a no-brainer. Like, I mean, I've showed you my results so many times. I took $1 million to $15 million in scalps. The numbers are way bigger on the hourly system. And I'm just day trading, you know, every day, and it's like, it's really easy. Today I did a really unique trading style to get that big uptrend. I think there was 42 trades, and I always keep the position size the same. But what I would do is I'd find a technical level on Tesla or Bitcoin, and I mean technical level like intraday, high wick or low wick kind of thing. And I would buy 100 shares Tesla long and sell 100 shares Tesla short within 10 cents. So long and short. Okay. It can only go three ways. It can go up, it can go down, or it can go sideways. Well, the uncertainty, the fear, it's got like a whipsaw effect. So what I was doing is I go 100 shares short, 100 shares long, and then I would find the other wick, and I would just put my take profit right below it, and then my take profit below the lowest wick right above it, and it would just whipsaw take profit, whipsaw take profit. It was just building me up all day. I was like, oh, it took profit, better do it again. All day, because I was using the uncertainty and the fear to my advantage. Just like I make enough money to live for half a year on 1 hour, as Jerome Powell speaks on the FOMC days. Because I build the charts, I have the watch list, long or short, and depending on the sentiment and how it's received in the market, whether it's jolts to the upside or comes down like a rock, I'm ready, and I'm ready with my leverage plays and to get in on that momentum and volatility. So I like to use the fear to my advantage, and I kind of want to be contrarian when everybody's so fearful and the extreme fear gauge is going, you know, the needle is broken on that thing. I kind of want to be like, I don't know, man. Like, it just kind of feels like we need to be like, nibbling, not going all in, nibbling on some of these really good companies for a long time horizon. And then again, I don't want to get too into trading because it seems so much easier right now. I want to talk to like investors and hodlers, because I know we have some in our group that are feeling some pain. But like we have this one girl in our group, and she has two stocks. She has Amazon and she has Google. Great companies. And I don't know how much she's down, but she's down a little bit. And we were talking about something in the group the other night. We were talking about like Dogecoin and Twitter, I think it was. And she goes, I wish I had Dogecoin and Twitter instead of Google and Amazon. And I was like, look, like I have all four, you know, but Twitter's not a conviction play. It was a tradable play. Doge, it's like a long shot, and I made a lot of money on it once, and I got in on that momentum at like 50.057 or whatever. It went to 64. It's down a little bit. It's still up though. It's not high conviction, okay? But Google and Amazon, I was explaining to her, those are good long holds. And if you're just patient, they're big companies, you know? And yeah, it sucks right now, but the market will go up, you know, minus, you know, some black swan event. And if that really happens, I don't think any of us will be on YouTube, and there won't be a stock market, you know, because it'll be bad. This is all I can say. Even if it's high conviction and you're identifying a zone and you nibble, even if you do those three things, I still want you to put a stop loss on. I still want you to pay for insurance. Not because I want your house to burn down, okay? But just in the event that it does, you have insurance. And if it doesn't burn down and you have a stop loss, it doesn't get hit, and it goes up, you're still going to put a stop loss and pay for insurance next year. Not because you hope your house is going to burn, but you're going to continue to pay for insurance, and you're going to continue to raise your stop, because it's better to get stopped in the profit than, to watch it fall all the way down and not have a stop on there and then watch your money bleed out, Remember, you can always make money if you have your money. But if you lose half of your money, and I'm even speaking to people that don't have margin. If you have margin, you guys have not been listening to me. You shouldn't be in margin for, almost a year now. It would have been like 10 months. So, let's just say you're in a cash account. This is, it's not a good time to be losing 50% of that. So you don't have to. You can just put a stop on there, and you could raise your stop and get stopped in the green like I do. You can springboard into momentum on ones that are barely down, like 2, 3, 4, 5x with your cash, and defend your money with your money like I do, and just siphon it out one at a time. Or you can just, keep buying on technical supports down here and nibble, but have a stop lower, like a pivot low down, just in case, And I feel like a lot of these institutions and a lot of these market makers have been doing what we would call as like a stop hunt rise. They're hunting stop losses. They're coming down and they're wicking it down to snap up your shares for lower, have you take a loss, get you to capitulate so they feel better about coming in and owning all the shares that they're going to sell you 4 or 5 years up the road. I'm seeing stop hunt rises going on. Liquidity wick shakeouts is what they are. I'm seeing them. I'm also seeing, specific buy zones down here, and I'm still seeing, technical indicators that say, hey, you know what? Even though they knocked us down for two hard days, I still have things on my chart that says don't get shaken out. So if you want to come in the Discord, you want to chat with me and everybody else, everybody's showing gains and doing charting and talking about all kinds of cool stuff. Come on in, it's free. The Discord link is in the description. I appreciate you watching to the end. My name is Chris. This is Wheelhouse Trading, and welcome to the Wheelhouse.